Warm welcome to everybody across the great state of WA. We have many people online tonight, it looks like, from metro, rural and more remote areas. Tonight, we are proudly presenting a webinar on the COVID-19 JobKeeper and cash flow boost payments. Our aim is to give guidance to our parent bodies in these difficult times that will hopefully help them make successful claims and support their employees, the school and ultimately the kids, because that's what it's all about. My name is Richard. I'll be hosting this webinar on behalf of WAXO, WASCA and Francis A. Jones. We are incredibly fortunate and grateful to have Daniel Papafotis from FAJ with us tonight. FAJ is Francis A. Jones, and he is going to be doing most of the talking and covering the payments in detail. This work tonight from Daniel and FAJ is pro bono work. Hi, Daniel. Thanks for joining us and giving up your time, not just tonight, but with all the preparation that I know has gone into this presentation.
Thanks, Richard. Thanks for having me. It's a pleasure.
I'm going to hand over to Daniel very soon, but first, some notable introductions and web keeping. First, every one of you, all our fantastic volunteers that give up many hours of their own time, including tonight, to make their parent bodies work. It's great to have you here. Also joining us tonight are representatives from WAXO and WASCA. I'd particularly like to welcome the president of WAXO, Panya Turner. She's joining us from Norseman, and WASCA's executive officer, Megan Sorzia. At the bottom of the screen it's on the screen at the moment, you will see our disclaimer. Please take a moment to understand it. Okay, now to a bit of web keeping. We did promote this as a 60-minute session, but there's a very strong possibility we will not get through it in that time frame. Very strong. If we go over that, I'm sure you won't mind staying a bit longer and enjoying the excellent information you are going to receive. Unfortunately, no technical assistance can be given during this webinar. If you drop out or you experience difficulties, please know this webinar is being recorded for you to refer back to. Also know that you can try a different device and see if you have better luck. And I know that sometimes that actually works. To the right of your screen, near the hand icon that you used earlier, you will see a chat function. Anything you write in there will be seen by everyone. This is where your questions go. The name on your profile will appear next to that question. Of course, if you're on a mobile device, this is going to look a little bit different. You'll also see cursors on the screen that will have names on them. This will enable Daniel to annotate and highlight as he speaks, which is very, very handy, and all that gets recorded. Okay, so a bit more about questions now. We've already had quite a few questions submitted this week, and those questions have been forwarded to Daniel, and they'll be covered tonight within the prepared content rather than separately. If you do have a question, please type it in the chat function at any time. We do ask that you listen to all Daniel's explanations on a topic before writing your question. Chances are it will be answered within the prepared content. If you do ask a question, please be clear and explain yourself well. Read the question through before you hit send, and don't hit enter on your keyboard until you are finished, as that question will be launched half written. And you'll need to write it again, and we've all done that at some point. I will monitor the questions and I'll refer them to Daniel when required and allow him to get on with the presentation. Daniel will answer questions within his area of expertise and will not be venturing into advice within the scope of Fair Work, Wageline or other organisations, and answering questions is purely at Daniel's discretion. Daniel will be able to answer most questions on these payments. If your question is complex or involves financial advice about JobKeeper or cash flow boost payment, he can be contacted separately. As stated previously, this will be recorded and it will be available on our YouTube channel by early next week, along with all our other webinars and videos. Here is the agenda for tonight. It is very straightforward. We have an introduction, which is almost done. Daniel will then briefly cover boosting cash flow for employers. And we've already heard from some very, very happy PNCs that have received this into their bank account already, which is brilliant. Daniel will spend quite a bit of time on JobKeeper payments. There will be calculations and examples that Daniel will give. And then, of course, there will be questions that you can ask through the night using the chat function. I'm now going to hand over to Daniel. I'm going to let him introduce himself. He's going to take control of the slides. He's going to introduce FAJ as well, and then he's going to get started. Thanks, Daniel. Over to you.
Thank you very much. First thing I wanted to say is I need a new photo. That's a terrible one there. Anyway, the quick story about me. I'm a partner at Frontsay Jones, and we are the largest accounting firm in Fremantle. We specialise in taxation, super, home loans and auditing. I'm the audit partner and also a registered company auditor. I've completed many audits for small to medium associations, including PNFs and PNCs in my time, and I have a good understanding of the issues faced when there's a large number of volunteers and only a small number of paid employees. Today, we'll be covering the cash flow boost and JobKeeper. As Richard mentioned, most of my presentation will be based on the JobKeeper, and hopefully at the end of it, everyone's got a lot more detail on how to apply that. So let's make a start. Cash flow boost. About 2 or 3 weeks ago now, when COVID-19 first hit, the cash flow boost was the first initiative that the government released, and it was targeted at employers. So the cash flow boost is a relatively easy one to explain because there is a lot that needs to change. The government, essentially what they're doing, they're just paying you money for the amount of pay-as-you-go credits that you actually pay. So I'll just read the first point there. Is eligible businesses and not-for-profit organisations will receive between a minimum of $20,000 all the way up to $100,000. So, and that's across the board for any association. So when I say businesses or non-for-profits or charities or associations, it's all, in this presentation, it's all businesses. So whenever you see that, it includes everyone here today. So the cash flow boost amounts, they're recorded by lodging your activity statements as you normally would all the way up to the quarter of 2020. The way that the government has structured it, it's based on the amounts withheld from wages paid to your employees. So you can only get the cash flow boost if you have employees. If you have only volunteers, then you don't qualify for that. The minimum cash flow boost credit that you will receive when you lodge your March activity statement is $10,000. So most of you, if you have lodged your March BAS, you've probably already received that $10,000, which is great. So just an example that I wanted to give there is if you have one staff member, one employee that you may withhold $2,000 worth of pay-as-you-go tax for, then you will still receive the $10,000 minimum amount on your March BAS statement. If you have $9,990 worth of pay-as-you-go credits, you will still receive that $10,000. So $10,000 is the minimum, and it doesn't matter how much tax you actually withheld, as long as you got wages. So the key there is you need to have wages on your activity statement, your business activity statement, and you will receive that $10,000 credit. Just some requirements in terms of how you qualify for that is your turnover must be less than 50 million. So there's no dramas there. You must have an ABN, and that had to be in place by the 12th of March. And you were trading. So it's all well and good to have an ABN, but you must be actively trading and lodging BAS statements well before that date. And it's not a requirement to actually have, so you need to have employees, but you don't have to withhold tax. So if for one quarter you paid wages, but the wages were very low and you didn't withhold any tax, well, that's okay. You're still going to receive the $10,000 credit from the government. Just in terms of payments, once you lodge your March BAS statement, you'll receive $10,000. When you lodge your June BAS statement, you'll receive $5,000, and then September will be $5,000. So that's the way that they've structured the payments to be 10, 5, and 5 if you lodge on a quarter, and if you lodge monthly, you'll receive $10,000 now, and then it would just be $2,500 every 2 weeks. Sorry, not every second month you'll receive $2,500. So let's get into JobKeeper. I imagine all the questions will start popping up now, so please send them through. But the JobKeeper is focused on employees. So cash flow boost more so employers, but the JobKeeper was really focused on employees, and it was a payments made by the government to keep employers working, to keep them spending money, and to try not make the economy go into recession. So what is it? Well, it's for businesses impacted by COVID-19. So I just wanted to make a point there, is for many PNCs, if you've closed because of COVID-19, obviously you're impacted. So this affects you. But if you're still open, if a business was still open and wasn't affected, then you can still qualify for the JobKeeper payment. There's nothing in legislation that says that you have to prove that COVID-19 was the reason for your decline. You just need to have a decline. So that's the first point I wanted to make there. You have access to a subsidy by continuing to paying employees, and that amount is $1,500 per eligible employee. The JobKeeper is the payment from the government is 13 fortnights, so it's from the 30th of March all the way through to the 27th of September 2020. So 13 fortnights works out to be $19,500 per employee if you're registered from the first date and you've ticked off all the registration details. Enrolment for JobKeeper is all the way. The tax office have extended it. You have until the end of May to enrol. So the enrolment's not the issue. The issue and I'll mention it in a few other slides further up. The issue is not enrolling because you've got time. The issue is paying. The JobKeeper payment is a reimbursement for wages paid. So, and that's really important. And you've probably heard all that on the news and read about it. You have to physically pay the staff first, and then the government will reimburse you. So that's a very important point. And we'll look at in other slides when those payments need to be made. So what's the criteria? Well, firstly, you must have a business and you must be carrying on a business or non-for-profit as of 1st of March 2020. It's very important. So if you're a new association after that date, then it won't apply. If you're a new charity, so charity's a little bit different. If you're a new charity and you've been set up after 1st of March, then there's other specific rules available for charities if you're set up because of COVID-19. So charities set up after 1st of March can still qualify for JobKeeper, but anyone else has to be in business before the 1st of March. You must employ at least one eligible employee on the 1st of March 2020. So an eligible employee is a long-standing casual, and I'll explain what a long-standing casual is in the next slide, but they must be employed for at least 12 months or be part-time or full-time. So if you employed a part-time or full-time employee on the 20th of February, then they qualify for JobKeeper. The 12 months only applies to long-standing casuals or casual workers. There must be a decline in turnover. So the main part of this is satisfying the turnover. It's all well and good having employees, but you must pass a turnover test. So turnover test really is, in this case, whenever you see turnover, it's just income. So it's not profits. Don't worry about your gross profits or your expenses. It's purely just looking at your income, and income and turnover is the same meaning in this point. So it's your total decline in turnover, and you meet that test if you have a decline of 30% compared to the same period last year. If you're a charity, you pass if you have a decrease of 15%. So I just wanted to mention there, ACNC stands for Australian Charities and Not-for-Profit Commission. To understand or to check if you are registered as a charity, I recommend going on the ABN Lookup website or the ACNC Charity Register and entering in your ABN. And in there, you'll be able to check if you are a registered charity or if you're just an association. So I recommend doing that if you're not too sure.
Okay, Daniel, just before you go on to that next slide, we do have some questions popping up. Bernice has asked a question, and that is about, I believe that's about the cash flow boost payment. And the question is, after the initial $10,000 payment, I thought you would only get a further $5,000 and $5,000 if your withholdings have exceeded $10,000. Do you see that question there, Daniel?
Yeah, that must be right at the top. Yeah. No, so you just have to keep withholding tax. You just have to not withhold. You still have to just pay wages. So if you're paying wages, you will automatically receive $5,000 when after you lodge your June BAS statement, and then $5,000 after September. So you don't have to go over that $10,000. $20,000 is the minimum that you will receive at the end of the whole cash flow boost.
Okay. Now, thanks for that. And Philippa has asked, when will we receive the payment? We want to make sure we get it before paying out the next fortnight on 10th of May. Now, she's referring to JobKeeper payment.
Right. Yeah. So we'll discuss that in terms of the payments. The payments are generally 4 to 5 days after the month, but we'll go through that. That's covered further down the slides. Yeah.
Great. Okay.
Was that it? Any other? I'm happy to answer any other questions now, or should we?
I'm just going through them at the moment. Yeah. There's a few that have come up.
Yeah, I think reading most of them. I'll cover the rest. Yeah. I'll keep going. Yeah. Okay.
Thanks.
So the first criteria before we look at the turnover test and the decline in your income is you must have an ABN. So that's really important. You must have an ABN. And that has to be at 1st of March 2020. Do we have to register as a business? No, you don't have to have a business name, so to speak. Having an ABN classifies you as an active business, and you don't have to do anything else besides that. Do we have to be registered with the ACNC? No, you don't have to be. If you are, then you're a charity, and there's different concessions available to you. That fourth point is important because I have received a few questions about that in the past week, is do you have to be registered for GST or pay GST? And the answer to that is no, you don't have to be. If the legislation is written and says GST turnover throughout the document, if you're not registered for GST, you just scrap the GST and it just says turnover. So don't worry too much about GST. If you're not registered, you will just complete your decline and turnover calculations based on what hits your bank account for getting GST. Okay, so I think going through this slide should answer some of the questions that are popping up.
Yes.
So this is based on this is still based on the employer, but it covers the employees. So I'll use an example for the first one. So you need to have an employee, obviously, on the 1st of March. If they've been stood down because, this is an example, the canteen's closed. So you've on the 1st of March, they were an employee, COVID happened, you've made the choice to close down your canteen, so they've been stood down. You can then increase you can either increase their hours or keep them on your books, but because they're still an employee, they'll be entitled to JobKeeper. If after the 1st of March you've terminated someone, you can rehire them now, as long as they were an employee on the 1st of March 2020. So that's important. They had to be an employee on the 1st of March 2020, and you can rehire them. So I just wanted to make a point there. You can terminate someone and rehire them, and they can be classified and receive the JobKeeper payments. They have to be full-time, part-time, or fixed-term employee, or a long-term casual. So the definition in the legislation says that the long-term employee must be employed on a regular and systematic basis for at least 12 months. So regular and systematic are the key words there. And I'll give an example of the way that I interpret it. Regular and systematic would mean that your long-term and casual employee, if they have been there for longer than 12 months, must have a regular shift, or a Monday every fortnight, or regular hours, so many hours every month. So there has to be something regular or a system in place. So if, in the example, if they are just called ad hoc when someone's sick, then unfortunately I don't think that would pass the definition. So there has to be some systematic or some regular scheduling of their hours to pass that part of the test. They have to be Australian residents. They cannot be receiving any paid parental pay or dad and partner pay. They cannot be receiving any workers' compensation payments. And just with those 2 points, if they are receiving those payments, as soon as they finish receiving them, then they're eligible to receive the JobKeeper. So it just means at the time that they receive those payments, they can't receive any JobKeeper. The second last point there is have agreed in writing to be nominated by you as an employee. That's really important. So what I wanted to point out there is if you were to go to the tax office website and just type in employee nomination form or JobKeeper employee nomination form, there will be a template that you can download from the tax office that you can use for your employee to sign. So what that form pretty much says, it answers the 5 dot points above. So the employee is confirming they're a resident, they're not receiving any paid parental leave and workers' comp. But the main part about that form is they're agreeing to enter the JobKeeper scheme, and they're also saying that they're not receiving it with another employer. So that's a key point, that the JobKeeper package can only be paid once to an employee, or not. An employee can only be nominated once with one employer. So just wanted to make that clear. If you go to the ATO website and type in nomination or JobKeeper nomination form or JobKeeper nomination notice, it would come up there in their search function, and you can download that. And there's no requirement for that to be sent to the tax office. It's just a form that you fill in, that's filled in and signed and stored in your files in your own directories. So everything that we went through is all well and good, but at the end of the day, you still have to pass a decline in turnover test. So this is really the main part of the JobKeeper. We've got some worked examples coming up, but first, I'll just go through this slide here. So what is turnover? What's included and what's excluded? That's the next slide. But if you're a charity, if you're an ACNC registered non-for-profit, you only have to pass a 15% reduction in your income. If you're any other business, then PNCs and non-for-profits associations, that's 30%. The cash or accrual point there, I just wanted to elaborate a bit more on that. If you operate, let's just, in an example, you are registered for GST on a cash basis, and you lodge quarterly BAS statements on cash. The tax office recommend that you include the cash amounts. Your income sources are cash, what you receive, and what you receive in the bank account. You account for it on a cash basis. So again, if you're registered on a cash basis for GST, your turnover is cash based. However, you can use accrual. So if you feel as a PNC that even though you're registered for GST and you do your GST on a cash basis, but you feel that an accrual system is better. It's a better reflection on your business. In this case, you may have debtors, you might have creditors, you may have other liabilities and other assets on your balance sheet. And you feel that an accrual system is a better reflection of your business. Then you definitely can use the accrual figures in your turnover test. And the tax office, you won't really have to explain that, except to say that it's a better reflection of your business. The issue that the tax office have is if you are registered on a GST on an accruals basis, and then you go back and say, hang on, I want to use the cash figures in my turnover test. And the reason for that is the tax office don't want you to just use cash as a way of passing the JobKeeper test. There needs to be a sufficient reason of why you're using a different test. So if you've got any questions about that, please let me know. If you're not registered for GST, then you'll just account on a cash basis. It's almost like it's the same way that you would complete your tax return. When you pay something or when you receive something, it's income or it's an expense. So what's turnover? So I think out of all the slides that I have today, this one here probably took me the longest to create. And the reason for that is there's different rules and concessions available depending if you're not registered, or you're a charity. So there's all different colors there, and I'll focus on the green table first, and then look at the orange, the yellow, and the blue boxes. But essentially, we'll start with a non-for-profit not registered for GST. So I've included on the left-hand side there all the common income sources. So apologies if I'm missing one. Please let me know in the chat. I'm happy to tell you whether I think what turnover, if it's a tick or cross. But I've included, I think, the majority of income sources there. So if you're a non-for-profit association not registered for GST, then everything with a tick mark you would include in your turnover test. And the only income sources that you won't are interest, donations, and gifts. So interest essentially represents any investment earnings. So that also wouldn't be dividends, distributions from shares, and so forth. And donations and gifts are not included because they're not deductible if you're not a charity. So that's important. So not registered for GST is a little bit easier. You include most of the income sources except those three crosses there. If you're registered for GST, then it's very similar to if you're not. The only potential difference is if you've made an election. So if you look at the red or the orange top right hand box there with the first asterisk that says not-for-profits registered for GST can elect that canteen sales are input taxed, i.e. they're not subject to GST. If an election is made, for example, at the AGM and detailed in the minutes, then the totals from these accounts are excluded from the turnover calculation. So, in other words, if you at the AGM, if it's agreed on by the members that you're not you elect to not include any GST for your canteen sales, that would also mean that you don't record any GST on all the canteen purchases. So if you made that election and it would be within your minutes of your association, then you won't include canteen sales in that calculation. So if you're not too sure whether that nomination has been made, maybe just look at the way that your previous base statement was calculated, and if there's canteen sales in there, then it's a good possibility that election wouldn't have been made. But I just wanted to make the point that there may be a situation where you may make that election. With charities, with the second asterisk there, it's a little bit more, I wouldn't say confusing, but you have a lot more concessions. So the charities can elect not only for canteen sales to be exempt, but also fundraising activities. So fundraising, auctions, raffles, discos, anything of that nature can also be input taxed if an election is made at the AGM. So when I say input taxed, obviously you wouldn't include that in your BAS statement, but you also don't include those income sources in your turnover test. The last box there is specific to charities, and this is a recent ruling by the government, is that if a charity receives government revenue, so in my case, in this case here, I've got three little asterisks next to school P&C contributions and grants, because in my opinion, they potentially are government revenue sources. So if you receive government revenue, then you have the option to include or exclude the amounts from the calculation. So that's important there. And also I wanted to mention is that donations and gifts, if you're a charity, are tax deductible. So in that case, you will include donations and gifts in that turnover test.
Okay, Daniel, if we can just hold there, can I get you to go to the chat box and scroll up and up and up until you get to a comment where I had written great on the right-hand side. You'll see that?
Yes, I've seen that.
Yes, okay,
Great.
so go down a couple, you'll see a question from Laura. Now, I think some of these have already been covered, but let's go over and review them anyway, if that's possible.
Sure, yeah.
Laura's from where Laura has asked, does this apply to an employee that we let go and rehired? And I imagine that's JobKeeper.
Yes. So as long as that employee was employed on the 1st of March, so they had to be employed on that date. If they were let go after that date and then rehired after, that's okay. They still qualify for JobKeeper. I mean, pending we pass all the turnover rules, the 1st of March is the key date there. Yeah.
Excellent. And Petro's question in the next one is a cash flow boost
yes,
for wage.
That's right. Yeah. So unfortunately, it's just purely for wages. So if you have if you have no employees and you've got volunteers, it doesn't apply. So you need to have employees and wages. You need to pay wages.
Daniel, do any of these cash flow boost or JobKeeper have to be repaid at any point?
No. Well, the only way it will be repaid is if you're not entitled to it. So if something if there's a scheme involved, but no, you don't. There's nothing to repay once you receive the money.
All right. No. Now, Christine has asked a question. I think you're going to cover this a little bit later on.
Yeah.
Could you have a read of that one, please?
That's directly under Petro. Yes.
Yes, that's right.
Yes. Yeah. Okay.
Do you want to leave that one to a little bit later?
Yeah. I think I will leave that. I have come across that there has been issues with single touch payroll.
Yes.
Maybe that one we can discuss a bit later. But yeah, I wouldn't mind leaving that to the end.
That'd be great. And thanks, Christina, for writing that.
Yeah.
Okay, let's go down to Bernice's question, which is 2 below. If you receive the minimum credit of 10,000, you will not be able to receive. Oh, I think she's actually answering someone's question there. So that's great. We'll go down a little bit further.
Okay.
Todd has asked, Natasha has asked, do we repay? We've already answered that. Todd has asked, when should JobKeeper payments start getting paid to canteens?
Yeah, so that really would depend on when the payments when your payments were made. So we'll cover that in a few other slides. But essentially, the JobKeeper payments from the government occur 7 days after the end of their fortnights. So the JobKeeper, the government have their own fortnights that they've listed, and they'll pay after their own fortnight. But we'll cover that a bit later.
Great. I think the next few comments, people just have discovered they should never use Microsoft Edge. We'll go down a little bit further. Julia has asked, we had a casual who was on the books to be called on as needed. Last time she worked was November. Where do we stand with that?
Yeah, unfortunately, in my opinion, you won't pass the regular and systematic rules. The whole premise about JobKeeper is self-assessment. So I get, you could argue that it's regular, and that would be okay in that case. But I guess in my opinion, it wouldn't be. Unfortunately, there's no examples that the tax office give, and that's the hard part. I'm only going off definitions from their act. So in my opinion, it wouldn't be. But if you can come up with some type of system, then I guess I'll leave it up to you.
Okay, we can go 4 below that to Emma's question. So we closed our canteen week 9, term 1, and won't reopen until week 4, term 2. Can we still get JobKeeper for that time for our employee? I think you know the answer to that. Yeah,
so if that employee was still employed and just stood down or received no hours because the canteen was closed, then yes, you still would be entitled to JobKeeper. The issue is you must make the payments by a certain date, and we'll cover that a bit later. It's all about timing of payments. Yeah.
Thanks, Daniel. Petra has asked for JobKeeper who applies employer or employee. I think it's employer. I think that's been answered below as well.
Yes, that's right. That's right.
And Susie has asked, is the cash flow boost only available for businesses registered for BAS? That's a good question.
Yes, that's right. You have to be registered you must lodge a business activity statement, which includes wages. So yeah, that is right. You must be registered for BAS or registered with the portal and have an employee that you pay wages for.
A few down, just before I've written it's being recorded, Todd, the question above it, that's actually from Todd. And I do believe you've answered that that's quite likely, isn't it? We close the canteen the last 2 weeks of term
Yeah.
1. If we pay our staff for that, we get them reimbursed.
Yes, that's right. If you pay your staff the required amounts, the top ups or the $1,500 amounts by the due date, by the payment date, yes, you will be reimbursed for JobKeeper, pending you pass the decline in turnover test.
Okay. And a few people are having problems with audio, but we'll go. Fortunately, there's not much we can do about that on our end, so we'll just go past that. And we're getting very close to the bottom here. I think that's Shani's question. She's only got us audio just sorted. Our canteen lady's on JobSeeker. Can she stay with JobSeeker? Do we need to switch to JobKeeper?
Yeah, that's a very good question. So, just we haven't explained what JobSeeker is, but JobSeeker is essentially New Start, the dole, what the government would pay if you're unemployed, which is $550 a week. So $1,100 a fortnight. So it's not as much as JobKeeper. But once if they were to receive JobKeeper, then they must let Centrelink know to stop the job seeker payments. So they can receive JobKeeper after JobSeeker, but you just must let them know, let Centrelink know.
And the next question is from Rob Fairholme, is our new state councillor for Joondalup East. Welcome, Rob. Welcome tonight. Our turnover definitely dropped 30%, he says. We've reopened and happily, that's great, I'm starting to pick up. I'm not sure, do we have to be monitoring when our turnover reaches that 30%?
So we'll cover that in the case study. But essentially, once you've calculated the drop in turnover by 30% and passed the tests, then you're in the system. Doesn't matter what happens after that. If everything goes back to normal, which hopefully it does, you'll still receive the JobKeeper payment. So once you're in. You don't have to keep monitoring whether you pass that 30% test. Thank
you, Daniel. I'm going to let you continue now, mate.
No worries. So the next part of the presentation is really about the case studies, and I think this will be the most benefit to everyone here. If you're not too sure whether you passed the decline in turnover tests. So the first test is the basic test, which is a lot easier than the alternative test. So we'll just click through the next few slides, and then we'll look at what steps need to be taken for the basic test. So step 1 is there's a comparison between the period from this year and last year. So step 2, we identify the relevant comparison period from 2019, work out the relevant GST turnover, or if you're not registered for GST, it's obviously just turnover. Step 4, you determine which shortfall applies to you. In step 5, you determine whether that shortfall has been met, or in other words, whether you had a decline of at least 30% for associations or 15% for charities. So it'll make a lot more sense when we go through the case study. So in this example here, it just explains and elaborates more on that previous slide. So this is what the basic test is. What you see in that box there is the test months. So you've got March, you've got April, and you've got June quarter. So they're the test months. So you must pass one of those 3 to pass and to receive JobKeeper. So what I mean by that is you're comparing March 2020 with March 19. If you fail that, then you can also look at April 2020 with April 19. And if you fail that, and when I say fail that, your turnover in 2020 is not 30% lower. If you fail both March and April, then you can look at the June 2020 quarter with the June 19 quarter. So in my examples further in the next few slides, I haven't looked at the June quarter. I haven't included that in my examples because it involves estimating what your income is, which is fine, as long you just need to make sure you have really good assumptions and work papers and reasoning how you got to those figures. So it's perfectly fine to estimate and what you think your income's going to be for the June quarter. And if once you get to that point, you're just comparing that to the June 19 quarter. So an entity will pass the basic test in 2020 on the left column here, if at least 30%, if it's at least 30% less than the corresponding 19 current GST turnover, which is the right column. Importantly, as the decline in turnover test is only required to be satisfied once, there is no requirement to satisfy the test again for a subsequent turnover test. So I know a question came through earlier, is if you operate and you account for GST every quarter, so you're registered and you lodge quarterly BAS statements, can you choose the month of March, for example, because it's only 1 month? The way that the legislation is written, it doesn't matter how you account for your GST, whether that's monthly or whether that's quarterly. The decline in turnover test is separate, so we're just looking at the month-by-month comparison, or you can look at the June quarter to the June quarter. There's nothing you're not able to use the March quarter, for example, versus for 2020 versus the March quarter for 19. The reason why the basic test is focused on March and April, because they were the months that were affected by COVID-19. So they've just factored in COVID-19 months, and if they were to have included the March quarter, well, you've got periods there that were potentially not affected by COVID-19. So this is the example. So in the table there, I've just populated amounts for March 19, April 19, March 20, and April 20. So we'll just run through the amounts there. So March 19, we've got a turnover. This is a monthly turnover, so monthly income of 2,900. For April 19, we've got 800. March 20, we've got 2,500, and April 20, we've got 550. Now you'll notice here that April is a lot lower. April in general is a lot lower than March, and the reason for that is for school holidays. There's nothing in the legislation that says that you don't include school holiday months, or you don't include periods that you're not open. The legislation is very silent on that. All they've said is you include the month of April or the month of March, and that's it. So the fact that you may not be open for 2 weeks of that, or a portion of that, or maybe the whole month if you're closed, that's the way the rules lie. So whatever your turnover is, you report on that, and that's what your decline in turnover is based on. So using the turnover amounts that we've got there, I've calculated what the comparison period would be for March, and then also I've calculated it based on April. So March 19 again was 2,900, and then March 20 was 2,500. So the calculation here that you must do is, and this is a question that I've received heaps during the week. The calculation is this: you go your March 2020 figure, take your March 19 figure, divided by your March 19 figure. So it's 2,500, take 2,900, so you get 400, divided by 2,900, and that will give you 14%. So based on the March comparison, we won't pass the decline in turnover test because it's not 30%, or 15% if you're a charity. So you failed the March one, that's okay, we can look at April. April 19 was 800, and then April 20 was 550. So 550 take 800, so 250 divided by 800 gives us a decline in the turnover of 31%. So we passed the JobKeeper decline in turnover test because it's more than 30%. I wish I could say it's as simple as that, but that's the way that you work out the turnover. So essentially it's April 20 over April 19, and it's on a cash basis. If you choose to report on a cash basis, if that mirrors what your GST is recorded on, or if you choose accruals, obviously those values there will be accrual. Some notes I wanted to mention there. The entity is free to use a monthly comparison, even if it is a quarterly BAS lodger, and equally the entity is free to use a quarterly comparison, even if it is a monthly BAS lodger. So we mentioned, touched on that earlier. If you wanted to use a quarterly comparison, well, your only option is that June quarter. But I recommend you look at the March month and the April month first, as that's the easiest way to complete the actual decrease. If you're not registered for GST, we would expect you to use the same accounting method you use for income tax purposes. So it's whatever hits your bank account, that forms part of your turnover for those months. It's pretty basic. Whatever hits your bank account is cash, and that's what you work out for turnover purposes. And point 3 there, and I mentioned this earlier, the legislation is silent regarding using full trading months in the turnover test, and therefore using a month that has been affected by school holidays, for example, April, does not affect the turnover calculation. So that's very important. And I know I had a lot of questions about that earlier before the presentation. So that's the basic test. So how the JobKeeper works is there's a basic test and then there's alternative test. So the first thing you must do is look at the basic test, and if you fail that, if you can't show a decrease of at least 30% for associations or 15% for charities, there is still some hope. There's an alternative test. Now, unfortunately, the only thing that's wrong with the alternative test is very, very difficult to calculate, and you'll see in the case study, you need a schedule or a plan of attack to actually work it out, and we'll go through it in a little bit more detail on the next slide. So before we get to the case study, I just wanted to touch on what's an alternative. What are the alternative turnover tests? So they exist because an entity fails the basic test, and in some situations, there's limitations, and some companies and businesses won't be able to use the basic test. So there's 7 scenarios or 7 classes that have been made available by the tax office, and we're focusing on only one today. So we're focusing on number 2, the business with a substantial increase in turnover, because in my opinion, the rest of the 7 won't really apply to the majority here today. So number 1 is for new businesses. So a new business obviously is a business that won't have a corresponding April 19 or March 19 turnover test, a turnover figure, because they weren't trading, and the specific rules of how you would apply to that. If any associations do fall in that number 1, let me know, and I'm happy to provide more information to you after the presentation. So 2 is the business with a substantial increase in turnover test. We'll focus more on that very shortly. Number 3, business with the irregular turnover. Again, that applies really for businesses that have received unusual amounts of income that they weren't budgeting for. 4, businesses that are affected by drought or natural disaster. 5, any business that has been disposed of or bought during the year. 6, any restructuring of businesses. Or 7, if you're a sole trader or you're a small partnership and the main active director has been sick or injured or taken leave. So many of those classes won't apply to associations, except really number 2 and maybe number 1 if you're a new business or new association. So let's focus on the substantial increase in turnover test. The problem for any entity is that you may have steadily growing turnover, and the turnover for March and April or the June quarter may have dropped significantly when compared to recent months, but not in relation to the corresponding periods in 2019. So, for example, your 19 April and your 19 March may have been quite high. May have. The drop in turnover in May 20, April, March, may not be 30% lower than what it was 19, even though you've been affected by COVID-19. So the main point of this turnover test is to have another option for associations to try pass the JobKeeper tests and it's mainly tailored at the associations that have growth over the year. And the only way that you essentially would apply this turnover test only because if you fail the basic test, then you apply this alternative test. There's no other requirements that you need to pass. So what is the increase in turnover test? Now this is where it starts to get a little bit tricky. With the basic test, we were working on the decline of income between April and April, March and March. So you had to have a decrease in income. But the main purpose with this test is actually the opposite. The tax office want to know, has there been a 50% more increase in the 12 months immediately before your test period. And remember, the test periods are either going to be March 2020, they're going to be April 2020, or they're going to be the June quarter 2020. So if you think of those periods, have you had a 50% or more increase over the 12 months compared to the same time last year? That's the first part. B is, if you don't have a 50% increase, do you have a 25% increase if you go back 6 months from that test period? Or C, if you failed that 6-month test, do you have a 12.5% increase over the previous 3 months? And it should get a little bit easier when we go through the example. The point I wanted to make there is you only need to pass one of these tests here. So to qualify for the substantial increase in turnover test, there's 2 parts to it. You need to pass this first test, and then there's another test that we'll look at very shortly. So let's look at the 12-month test in a little bit more detail. An entity can apply the alternative test if the entity had an increase in turnover of, so the 12-month test. So if the turnover test period is March 2020, if you choose that to be your test period, to satisfy this part of the turnover test, your February 2020 income must be, for 2020, must be more than double February 19. So unfortunately, you're going to have to go back all those months to work that out. But to pass this 12-month test, if your test period is March, then you need to go back until February 19 and comparing it to February 20 to see if it's more than double. If it's April's your test month or June quarter, then you look at the March 2020, comparing that to March 19. So that's only if you're comparing the 12-month test. So this is purely showing that you've had increases compared to this time last year of more than double. If you fail that, then you can look at the 6-month test. So the 6-month test is based, if your test month was March 2020, you're comparing February 20 with April 19. And you need to show an increase of at least 25% higher in 2020. If your test month was April, then it's comparing March 20 with September 19. So it becomes easier if you were to populate in Excel the figures, but this is just the theory behind it. If you fail the 12-month, you fail the 6-month test, then your last opportunity to pass this alternative test is by looking at the 3-month rule here. So you'll pass this section of the alternative test if you've had a 12.5% increase if you compare February 20 with November 19, if your test month is March, or if it's April, you have to compare March 20 with December 19. So let's look at an example because it makes it a little bit more easier to understand. The next step so we've looked at the first part of that alternative test. So you have to firstly work out whether you've passed the 50% test, the 25% test, or the 12.5% test. Presuming you passed that, the next, second and last part of this alternative test is you take the monthly turnover for the 3 months prior to your test period. So for example, if you've passed the 50% test, 25% test, or the 12.5% test for March, then the next step is, okay, what's the average of my months of December, January, and February? So whatever that average is, you compare that to your March 2020 figure, turnover, and if your March 2020 amount is at least 30% lower than the average of the previous 3 months, then you pass this alternative test. If your test month is April, then you're comparing the average of March 2020, February 2020, and January 2020. So we passed the test. What now? So let's see, the next slide might be, we can probably miss that slide, and we'll just go straight to the case study. So what I've done there, on the left-hand side here, I've populated all the turnover from February 19 all the way through to April 20. Now you'll notice every third month there's a decrease. And that's mainly, so April 19, July 19, October 19, January 20, and April 20. And the reason for that is because the school holidays, you're closed. There's no children at the school, and your income's taken a hit. But again, legislation hasn't touched on whether you're not including. It doesn't say anything about not including school holidays or not including parts of the month that you're not open. So whatever your income is, you document it. So it does look irregular, but that's just the way that the school year runs, I guess, in this case. So you populate your turnover from February 19 all the way through to April 20, and then you run the first part of the substantial increase in turnover test. So in this example here, we're looking at the test month of March and the test month of April to see if we have had an increase of at least 50% over 12 months, at least 25% over 6 months, or at least 12.5% increase over 3 months. So let's look quickly at March. February 19 turnover is 2,800. February 20 is 2,800. So there hasn't been an increase of at least 50%, so we can't pass that. If you look at the 6-month test for the test month of March, you're comparing August 19 with February 20. So it's 2,800 versus 2,400. We've had an increase, but not enough. You need 25% increase. With a 3-month test, you're comparing February again with November 19, and because November 19 was more than February, you can't pass the 3-month test. So in this example, we can't use March as our test month. So let's look at April. Looking at April, you're comparing the previous month with the same period last year for the 12-month test. So in figure terms, you're comparing March 20, which is 2,500, comparing it to March 19, which is 2,900, and that gives us, and obviously that won't work because our March 20 is lower than our March 19 of 14%. So we failed that first 12-month test. Let's look at the 6-month one. I've highlighted that in yellow at 25% because we passed it. Our March 20 is 2,500, but September 19 is 2,000. So again, the formula that you would use is you go the 2020 figure to 2,500, take your 19 figure, which is 2,000. So $500 divided by 2,000, so your 19 figure again, and that gives you 25%. So again, it's 2,500, take 2,000 divided by 2,000. And that will give us an increase of 25%. So we pass this first section of the first part of the substantial increase in turnover test, we passed. So we've even though the 3-month test there we failed for April and we failed March, that's okay. As long as you've passed one of those 3 periods, then you can move on to the next part. So the next part is essentially working out the 3-month average before April. So in this box here, I've just explained that's how I worked out 25% at 2,500 compared to 2,000. And then I've got the average, which is 1767. So if I'll just go back one slide, that 1767 is the average of January, February, and March. So even though January you were closed, it doesn't matter. You still include that turnover month. There's no ruling that says you can't. So it's essentially going to be $5,300 that you add up from those 3 months divided by 3. That gives you an average of $1,767. You compare that to your April turnover of $600, and that shows a decrease in turnover of 66%. So in this example, if this was a PNC or if this was a canteen, you would pass the JobKeeper, you would pass the decline in value using the alternative test, because that 66% is obviously a lot more than the 30% required, or 15% if you're a charity.
Yeah.
I noticed there weren't many questions when I was talking about that, but if there are any, please let me know.
Are you all right to go back up and answer some questions?
Sure, yeah,
Daniel?
for sure.
Yeah, all right.
No worries.
So if you could scroll back up your chat box, just above where I wish Todd a great night, on the right-hand side, you will see my comment. There's a little question above that, and I think they're talking about instalment activity statements. What I love seeing in this chat box at the moment is people helping each other out and answering each other's questions, which is good, but we'll go through them. So Emma
Yeah.
has asked that question there. I apologise if this has already been covered. We are not registered for GST, so we only lodge an IAS, not BAS. Are we still eligible for the cash flow grant?
Yes, as long as you pay wages. I guess that's the key. You need to make sure you're paying wages, and you don't have to be withholding tax as long as you're paying wages. That's the
Great.
key. Yeah.
Okay, go down a few and we'll see one from Maurice. Just to check, using your March 2019 to March 2020 example, and the turnover 30% reduction test is met, if May 2020 returns to normal turnover, which is quite likely, you can still receive JobKeeper payments up to September. Is that right?
Yeah, that's right. So once you're in the system, once you pass the door, you can't go back out. It doesn't matter what happens after that. As long as at the point that you register, you pass April or March as having a decline in turnover, and you're in the system, you stay. You don't have to. There's no requirement to leave or to reapply.
Yeah. And Liz and Wendy have attempted to help people out with their answers there, and I think they've done really well with that. Excellent. Thank you. We'll just go down a bit further. Emma has said they haven't received anything yet. And then a little bit further down, people have said that you need to update your bank details in the business portal because it gets paid directly into that. Is that correct?
That is right, yeah. So, I didn't mention it earlier, but you must have up-to-date BSB and account number, because what would happen is when you get paid that first $10,000, there's a very good chance that will clear any debts that are in the portal, because there's a good chance your instalment statement or your business activity statement is not going to be $10,000. So the refund will go into your bank account. I have a feeling if you were to log into the portal, you'll probably just see the money sitting there. So you need to make sure your BSB and account numbers are entered into the tax office portal.
Excellent. Thanks, Daniel. Okay, continue. Thank you, Daniel.
Okay, thank you. So we've gone through the two different types of tests, so the basic and the alternative test for the substantial increase in turnover test. So what do we do now? So unfortunately, there's other things that need to happen. And the first thing is you must be registered through the business portal. So we've got a link there that you can click on, and there's a step-by-step guide on the tax office website on how to apply for that. And it's a pretty straightforward process. You would apply. You need your MyGov ID, and you can just go from there. But unfortunately, there's no manual way of receiving JobKeeper. Everything now is online, so you must have that business portal, or you can go through a tax agent, so an accountant or your auditor, and they've got access through their ATO business portal or tax agent portal, and they can do that for you as well. The third point there is prior to May 31. So I may have mentioned it earlier, is that you must be registered for the JobKeeper scheme online by March 31. So the government have extended that. You have until the end of May to qualify and to register, which is a bit of time, which is good. The main thing that's pressing at the moment is actually paying the wages, and we'll get to that shortly. But enrolling, you don't actually have to do that at the moment. You can work out your turnover tests. You can be confident that you decrease the 30%, that you decrease by 30% using either one of the basic or the alternative testing, and then you can enroll later. The only disadvantage with that is as soon as you enroll, as soon as you get paid. So if you enroll right at the end of May, you get back paid. Don't get me wrong, you will, but you have to fund all the pay of all the employees up until the start of June. So I recommend enrolling as quickly as you can, so at least that way the government know that you're in the system, and you can start receiving the JobKeeper payments. And the last point there is your employers must sign the JobKeeper nomination notice, and you keep that on file. So that's important. They must sign it, the notice first, before any payments are made. And I guess this is all based around self-assessment. So if you were to get a query from the tax office, which may happen depending on their random checks, they'll check the nomination notices to make sure when they were dated and when payments were made. So I think we may have I've covered part of this already, but I'll explain this slide using a couple of examples. So if your canteen or we'll just use a canteen in this example. So you've shut down the canteen and now you plan to reopen. You can still the employees can still receive $1,500 a fortnight as long as you make a top-up payment by tomorrow. So the 8th of May is a key date, and unfortunately we're very time poor, and the next few slides has a table of the payment cycles, but the JobKeeper payments are from 30th of March to the end of September. If you're closed and you're looking to restart, and your employees are wanting to be paid the JobKeeper, what must happen is I recommend that you do this. Work out when your pay cycles would have been. So in this example, know you haven't made any payments to your staff because you've stood them down. Go back and say, okay, when were my pay cycles, and treat them so then go tomorrow. Unfortunately, you're gonna have to do this tomorrow. Make a payment on those dates for at least $1,500 per employee for the month of April. So your employees, in other words, your employees must be paid $3,000 each, as long as you've got that nomination notice back signed. And they need to be paid $3,000 each by tomorrow. So the payment actually has to leave the bank account. So that hopefully that's possible, but that's just the way that the legislation is written. That you have given until tomorrow to pay April wages, and that amount must be $1,500. So in this example I've said that no payments were made previously. If you've made some payments to staff in that April period, then your responsibility is to only make the top-up amount. So they must receive a minimum of $1,500 for the month of April, or $3,000 for the month. So if you have staff members that you've paid continuously throughout this last 6 weeks, then let's say $1,000 a fortnight, then you must pay at least another $500 per fortnight, so $1,000 each tomorrow. So that's really important. And if you don't do that, if you can't get around to doing that, then unfortunately you forego the first month worth of JobKeeper payments from the government. The superannuation requirement is a key point as well. How the legislation is written is if you've stood down employees to zero, to no hours, and now you're just going to be paying them the minimum $1,500, there's no super attached to that payment. So if you pay the minimum, no super. If you pay more than the minimum, it's super's only on the top up. So if you're paying $2,000 a fortnight, then super's only on the 500. On the flip side, if you're continually still paying staff, say $1,000 a fortnight, and now you have to make a top up of $500, well, that $1,000 gets treated as normal wages. So you would still have super on that $1,000. So again, if employees have been stood down and receiving nothing and not getting paid at all, then and you pay $1,500 a fortnight, there's no super. If you have been paying employees $1,000 a fortnight, and now you need to pay $500 to bring them up to that minimum amount, the $1,000 includes super. So I'm happy to answer any other questions about that. There was a question just about, do you withhold tax on the top-up amounts? The whole $1,500 is taxable. So $1,500 is the gross amount. So the employee is actually not going to receive $1,500 in their bank account. It's going to be $1,500 before tax. And it seems like Christine's all over it in the chat box there. But $1,500 is the gross amount less tax. So it might work out to be $1,350 or something around that. But the main thing is that the association pays in total $3,000 for the month of April by tomorrow. I guess that's the key there. So this might make things a little bit more clearer. The 4 dates there are the dates the government have published. So based on their turnover, based on their fortnightly pays, that's they're the periods that they're going to pay the JobKeeper. So what they've said is between the 30th of March to the 12th of April, the requirement was that the employee must make one payment between that date of at least $1,500. Between 13th of April to the 26th of April, you must make at least one payment for $1,500. If you haven't, then you have until tomorrow to catch up. So you must catch up and pay at least $3,000 in this case if you haven't been making any payments to eligible employees. And this is also, so not only do you have to make the payment, but you need a nomination form back signed, and you need to work out if you pass the turnover rules. So there's a bit to do by tomorrow. That's the first two fortnights.
Can I ask a question there, Daniel?
Sure.
Yeah, great. You said there's a bit to do by tomorrow. We did have a question through by email before, and that is, our PNC meets all the criteria to apply for the JobKeeper payment. However, we've hit a hurdle in the process as we don't have a business portal. What do we do there?
I'm guessing in that example, I'm guessing that they passed the decline in turnover test. So there just has to be evidence that you make the payment. So if you make the payment, if the money comes out of your bank account, then you pass that test. Then I would recommend going on that website that in the couple of slides back to register on how to do the business portal, and then you register that way. So as long as you physically make a payment out of your bank account, then you would pass those first two fortnights. There just has to physically be a payment out. Registering for the business portal essentially needs to be done before the end of May. That's the key there.
Okay, great. And that question was from Jenny. Yep. Thanks, Daniel.
Yeah, so the first two fortnights there, the catch up needs to be made by tomorrow. But the part that's a little bit more concerning is that third fortnight. So based on the tax office legislation, the period that they have is from the 27th of April to the 10th of May, which is this Sunday, Mother's Day. So what really theoretically needs to happen is you also need to make a payment by the 10th of May for $1,500 for eligible employees as well. So if we use an example that you haven't paid any staff because you closed, and you're thinking only now, like now you're looking at opening up again, and your employers want to receive all the JobKeeper payments, then you need to pay $3,000 by tomorrow, and another $1,500 by Sunday. After that date, if you fail that, if you don't make those payments, then essentially what would happen is you forego the first three fortnights, and then you just start from the fourth fortnight onwards. So if you make a payment within that fourth fortnight between 11th of May to the 24th of May of at least $1,500, then you're fine to keep going from that point onwards. So the key is to make a payment within the fortnights that the tax office have provided. So again, $4,500 needs to be paid per employee. Essentially, $3,000 tomorrow and $1,500 on Sunday. That's the max amount. If you've already made some payments, you just have to make the top ups up to those totals. So the tax office have also mentioned that every month, so not only do we have to make the payments, there is a requirement to log in to the business portal and just update your records. So there's a monthly business declaration that must be completed at least 7 days after month end. So when you log in, all you'll need to do is you'll have to update your current turnover and then estimate what your projected turnover is. And the tax office have come out and said they're not going to use this information against you. It's not there to look at any red flags or do any audits. It's just there to track how the economy is going. So it's just you just have to put in your current turnover and your projected turnover for the next 2 months, or the current month and the next month, and you must confirm that all employee details are the same. So if an employee was to leave halfway through the JobKeeper period, then obviously you would change that employee's details online when you do your monthly declaration. So I think we may have covered all these already. It's a fixed amount of of $1,500 per fortnight for each employee that's eligible, and it goes into the business bank account. So all the JobKeeper payments go into the business bank account. It's income. It's income for the business, but it's not income for the turnover test. So I did see a question is saying that is the cash flow boost income for JobKeeper for the turnover test? No, it's not. So you don't include any cash flow boost income. You don't include any JobKeeper reimbursements. That's exempt for any JobKeeper purposes for turnover. But the payments go into the business bank account, and then obviously you pay out wages as per normal. And the payment is made in arrears. So if I were just to go back a couple of slides, the arrears would be, for example, the payments. So the first 2 fortnights, the payments will be essentially, because of the extension to 8th of May, the payments will be made tomorrow or potentially Monday or Tuesday. But every fortnight from that point onwards, it'll be made shortly after the end of the fortnight. So 2 or 3 days after. And that's
Daniel,
it.
There's a little bit of a theme with some of these questions coming through, and
yeah.
With your experience with not-for-profits and small businesses, and during this time, Cheryl's asked a question here: how do you pay employees? And you might have some ideas with this. She has 5 paid staff. If the funds aren't available to actually pay that amount, what have some of the other businesses, small businesses, or NFPs done that you know of in those circumstances?
Yeah. So it's a really good question. If it was up to me, I hope I can send everyone an email tomorrow and saying that the government's changed the rules.
Right.
In my opinion, they should extend tomorrow's payment period to the end of May. So let's hope it happens. But based on the current rules, what's happened is the banks have been made aware by the tax office to provide loans for JobKeeper loans. So any application and there's a direct hotline with each bank that you can contact them with. But essentially, that they're happy to loan you the money for that month. Essentially, the issue is if you want to join the JobKeeper scheme from the first date and receive all the money backdating from 30th of March, you've only got tomorrow to do it. So I don't know whether you'll be able to get a loan straight away within in that one day. But based on my experience with other non-for-profits and other businesses that I look after, they've either loaned it from someone else, unfortunately, or gone to the bank. I guess that's really the only two scenarios that I've dealt with.
Makes it very hard for them, doesn't it?
Yeah.
Especially not-for-profits, small P&Cs.
Yeah, that's difficult. Right. It is difficult.
If anybody else has a suggestion there, you're more than welcome to write it down. Can you, Daniel, please go up to where on the right-hand side I've written "Thanks, Wendy." Are you able to do that?
Yeah, sure.
Now, a lot of people have answered each other's questions here, which is awesome. Really good, and they're helping each other out. So.
Yeah, I got it there.
If we scroll down and keep scrolling down, Rose's question: can you ask employees to work more than their standard hours within reason as they are receiving more money?
It's a very good question.
Does that come under
and I've got that many times before.
Wage line?
It does, but I will make a comment.
Okay.
If there's 2 parts to it. If an employee was say employed for 20 hours previously a week, and now they're receiving $1,500 a fortnight, and that's more than what they would have got, then I don't see any issue at all that they can work at least 20 hours, if not more. The way that I would work it out is work out the hourly rate. So whatever the hourly rate they're on, divide that by 1,500, and that's really the amount of hours that they legally can work. If they don't want to work that, then that's definitely a fair work issue. If the employee has another reason, say that they're saying they're isolating because they're not well for COVID-19 reasons, then really there's not a lot the employer can do in that case if there's legitimate reasons for COVID-19 in isolation. But unfortunately, yeah, it's a fair work question in terms of the treatment of what happens after that.
Okay.
I have received that many times though. That's why I did. Well, I wanted to make a comment because I do sympathise with the employers.
And Wendy has written a little bit further down to Rose. Fair Work has some good information on changing employees' hours with that. All right, that's great.
Yeah.
Kelly has asked, do we have to claim for the school holidays for JobKeeper, or are we not eligible next month? Not sure what that means. As in, we can't claim for only one fortnight in April. We have to claim for both fortnights. I might get Kelly to redraft or rewrite that question. Would that make it easier for you, Daniel?
I think what she means is, yeah, I mean, regardless of whether it's a school holiday or not, the periods that the tax office have provided are the periods. So there's no discretion whether it's a school holiday month period or not. If you want to pay your employee $1,500 and be reimbursed by the government, then it doesn't matter if it's a school holiday period or not. You must make that payment by tomorrow to backdate and to get that first lot of April payments. Unfortunately, yeah, it's just we're very time poor at the moment.
Okay. All right. Okay, so we'll just go down to the next one, which is Jandakot PNC. Employees don't get paid for school holidays, so to be eligible for JobKeeper for those 2 weeks, should I pay the 2 staff, assuming that JobKeeper will be paid for that period?
Yes, you would. If you pass all the other tests of the decline in turnover, yeah, you would. It's they get paid based on the fortnights of the government. So yeah, it's essentially that in this case, you're not going to be out of pocket because the government are going to reimburse you for that. So there may be a time delay in terms of when you receive the money from the government, but yeah, this is purely based on the fortnights that they've provided there. So just because it's a school holidays and they wouldn't get paid, yeah, that's just the way that the rules are written.
Okay, a little bit further down, past the woohoo.
Yes.
Where Chantel has written, just to clarify, the JobKeeper amounts of the cash flow boost will be exempt from the income for 2020 financial year?
Yes, they're exempt for the turnover calculation. Yeah, you don't include anything from the government. Essentially, it's government revenue anyway, but they're specifically exempt. There's no taxable supply, so please don't include any cash flow boost or JobKeeper payments with any turnover calculations that you receive in the 2020 financial year.
And I think that 25K there might be 250K. I'm not sure, but
yeah.
Anyway.
So just I will answer that second part. Yeah, you're right. That 250K is the limit that if you go over that $250,000 as an association, then you must have a review or an audit.
Yes.
Is it so? Would you include that? Yeah. So would you include those amounts for the 2020 financial year? I would say you won't include them. It's that the turnover test for audit purposes is based on your normal income. So no, I wouldn't include the turnover test or cash flow boost in that.
Okay, a little bit further down, Liz's question says cash flow is an issue always, as we have to pay ahead of time. This isn't going to change, is it?
No, unfortunately, no. And that's the big, from my opinion, that's the biggest issue with the scheme. It's great that the government's saying that they're going to pay all these amounts, but yes. It's a reimbursement. So you're always going to be out of pocket, potentially up to a week before depending on when your payroll periods are, I guess. But yeah, there is that time delay that you're not going to be able to have the money in the bank account after you pay your wages until you're reimbursed, and that will be until September 27, all the way through.
Okay, a little bit further down, Julia's asked, what happens if you pay someone and they end up not being eligible for some reason? If you've done everything right, you should be fine, right, Daniel?
So I guess with Julia's question, it's more from what the tax office will do. I imagine if so at the point in time that you enrol and you go through all the right procedures and you've got the nomination form signed, and let's just use the example that the employee wasn't entitled to it. You can only act in good faith at that point in time. So if you got notes, if you got good substantiation, the tax office have said that they won't really come back and ask you to repay.
Okay.
Potentially, what might happen, they may, if they were to investigate it halfway through the JobKeeper period, then they may stop those payments for that employee. I imagine, which would probably be fair because they're not entitled to it. But I doubt very highly that they would ask you to go back and pay that back if at that point in time you had sufficient documentation that you relied on to make that assumption.
Okay, thank you. Christine has given us a very subtle and gentle reminder to answer her question, which is way up the top. And that was actually about, we'll go back to that soon anyway. All right. So Megan, who is the Executive Officer of WASCA, has asked, Daniel, please confirm the cash flow boost will be forthcoming anyway. Should PNCs pay the $1,500 and then for some reason not be eligible for JobKeeper, the cash flow money could be seen as a reimbursement to the PNC, therefore will not be out of pocket. Is this correct?
The cash flow boost is, I guess, is a separate payment. So I guess I guess it's a reimbursement mainly, but it is supposed to be separate. So, I mean, yeah, you can look at it as a reimbursement, but theoretically, the cash flow boost was brought in to help businesses with the pay-as-you-go tax and paying wages. But with the JobKeeper was purely based on being a reimbursement for wages for employees. So I guess it can be viewed as a reimbursement, but I guess that's not the main purpose of it. The cash flow boost was helping the employers, but the JobKeeper was more the employees.
Let's go down a little bit further. Some people are talking to each other, chatting and answering each other's questions. Emma's question, just under Liz's question, Emma's question. Yeah. So if we're only paying the employee $1,308 net by holding the tax amount, will that show that we're paying the right amount to be eligible?
Yes, it was, because in total, you'll be still paying $3,000 out of your bank account in total, because you're going to be paying $1,308, and then when you lodge your BAS statement, you'll be paying your tax. So this is all based around self-assessment. So in other words, the tax office would have to check things to say that you're doing it wrong. So as long as you've worked out that it's $1,500 before after tax, which is the $1,308, and you pay that, that's fine. Then you pass, and then obviously the rest of it that you pay would be when you lodge your next BAS statement. So yeah, it's not like you're paying $4,500 or $3,000 all at once by tomorrow. It's going to be that less tax, but you're paying that, I guess, in total when you lodge your next BAS statement, because you got the pay-as-you-go tax involved as well.
Okay, and Rebecca has asked, you have to pass on the whole $1,500, and there's quite a few comments underneath that said, yes, you certainly do have to do that.
Yeah, that's right. Yeah, there's no that's a fixed amount, $1,500, as that would be the reimbursement by the government.
Okay, let's scroll down a bit further. And a lot of people are answering others' questions again. There's a long question there from Bernice. I think she's answering someone else's question, Daniel. Then there's a question underneath from Kim. Have you found that one?
Yes. Yes, I have. Yes, I have. If we can afford that one there, yeah, okay. Yeah, so if you can't afford to pay wages in April and only start paying wages in May, and pass all the other tests, you are still eligible for JobKeeper. Yes, you are. The only difference is you won't receive the first lot of payments by the government. So as soon as you register as soon as you start paying staff, depending on what fortnight that falls in, then you'll start getting paid from that fortnight. So back on that slide there, I can quickly go back to it if you like. Slide 36. If you start paying, if your first payment falls in that fourth fortnight, so let's say that you pay on the 20th of May, then you will receive money after that fortnight. So the key is paying within the fortnights prescribed by the tax office. So you're still eligible, don't get me wrong, you just miss out on the first, in that case, the first 3 fortnights. So $4,500 per employee. Okay.
Now, Daniel, I can see a lot more questions coming up, and I know that you obviously this is your private and personal time. So
no, that's fine. I'm happy to stay around. No dramas at all.
You're happy to stay around and answer questions?
Yeah. No, that's fine.
Okay.
No,
all right.
I'm more than happy.
Let's go down to Bronwyn's question. Can I please clarify a point about the turnover test? Do you see that one?
Yes, I do. Yes, about the resolution.
Yep.
Yeah, okay. So I'll just read it out. Our canteen does not charge GST on sales. So we passed the resolution at the AGM to state that our sales are input taxed. Did I understand your slide correctly that we cannot include our canteen sales in the turnover test as they are input taxed? That is correct. Yes, Bronwyn. So if you've made that resolution and you've made that, you've stated it at the AGM, in other words, it's declared in the minutes and signed off by the members, then you don't include canteen sales in the turnover test at all. So that's right. And I'm presuming you're not a charity, so it'll just be. I'll go back to that slide if you like, right at the top here. So in your case, you're registered for GST, I imagine. So you would include. Let's just say that you have all these income sources. So you include the uniform, you include contributions, auctions, fundraising, raffles, grants, car park revenue. You wouldn't include the canteen sales. But that is right. Yeah, if you make that nomination, then you disregard anything related to sales from the canteen.
Okay. Two under that. Question by Felicity. What happens if an employee is taking annual leave? Should their annual leave hours be given back to them as they can now be paid JobKeeper?
Yeah, I have been asked that, and I have seen that written. I don't think it should be, but again, that's purely fair work, and I wish I could help out a bit more.
Fair enough.
But it is a fair work, and it's a discussion between you and the employee. Unfortunately, with that one. It depends on the award as well. Yeah.
Okay. Thank you. So a fair work question or a wage line question.
Definitely. Yeah.
Emma's question just underneath that one.
So 1 second. So I'll just read it out. I have read somewhere that if our staff start working again, we're currently closed, that we pay them as normal for these physical hours and the JobKeeper to make up the difference to $1,500. But do we get, sorry, that's just cut off there. But do we get reimbursed for the actual hours and JobKeeper, or just the difference that the ATO pay to make up the total? So if I understand it correctly, you're paying a small amount to the JobKeeper, a small amount to your employees that's under $1,500. So the responsibility of the employer is to pay the top-up amount up to $1,500, and then the tax office will reimburse you the full $1,500. So it's a match. So if you pay $1,500 in total, then the tax office will reimburse you $1,500. So that's how it works. If you pay more than $1,500, then you're only going to get back $1,500 from the government.
Okay, thank you. Emma's under that. So normally we pay wages weekly. Would we have to change that to fortnightly?
No. So in your case, Emma, you would just make sure that your wages are $750 every week. So you would just halve it. But you don't have. You can if you wanted to, but you don't have to change the schedule of your pay periods. Keep it weekly. You just need to make sure it's $750.
Okay, and Jenny under that has asked a follow-up question from Felicity's about annual leave. Do we top up annual leave payment instead?
Well, annual leave payments form their ordinary time earnings. So in other words, they represent wages. So yes, you would top up annual leave and treat it as per normal wages. So whatever the annual leave is, you would top that up to the full $1,500 a fortnight.
Excellent. Thanks. And Rebecca said, thanks, Daniel. So much appreciated. And we are all thinking that at the moment. I can tell you that much. Liz.
Thank you.
We'll go down a little bit further.
Liz, yes. Underneath Rebecca's comment?
Yeah, yep.
Yes. Yep. So isn't that only if you are registered with ACNC, including the canteen sales? No. So it applies if you make that election. If you don't have to be registered for GST, you don't have to be registered with the ACNC. The only concessions that are different with the ACNC is the fundraising concessions if you make that nomination.
Okay, just a few comments, and I think people are answering each other's questions there. Haley's question there. Do you see that? It's just near the bottom, I think, fourth up.
Yes.
What happens if you have two different bank accounts, one for the PNC and one for the canteen? Do you have to combine the two accounts when working out your turnover downturn? It's for the entity,
so it's based under the one ABN. So if I'm presuming in this case the PNC and the canteen are all under one ABN. So yeah, you would include both bank accounts or the amounts from your bank accounts if you operate on a cash basis when working out the turnover test. So the key there is your ABN. If there's two ABNs, then there's two different businesses and two different tests that you need to look at.
Okay, thank you. Let's go down a little bit further. A couple of thank yous. That's great. Christine. Now, Christine, your earlier question, we're actually going to address that offline. Okay. But you've asked another one. Can I ask another question? We had a fate last year. Does the storeholder fees included in the turnover, is it donation or income?
I imagine, so yeah, I guess you have, the first part to that is I'll just go back up to that slide. So what I recommend everyone does is works out what column they fit into. So if you're not registered for GST, obviously you're the first one. So I imagine in this case, I'll go through all columns in this example. So if you're not registered for GST, then it's income as a fate, because you're not registered for. In my opinion, a fate would be income, and you would include that in your turnover. And the reason why I made that assumption is for there to be a donation, you can't receive anything in return. So it's like me donating to Telethon. I'm not really receiving anything in return. But if I'm at a fate or doing a raffle, I'm normally donating and getting something in return. So that's the key. If you're receiving something in return, it's a fate income would be just income for the purposes of the turnover. The only time it wouldn't be is if you make the election as a charity at your AGM, because that would theoretically fall under fundraising activities. So you could exclude that if you make that election at the AGM.
Okay, ready for a few more, Daniel?
Sure. Yeah. No worries.
Go close to the bottom. Third up from the bottom. Mel asked this question earlier, and I must have skipped past it. Sorry, Mel. And so she's asked it again. Does the third payment need to be made by Sunday? I'm thinking you're meaning this Sunday. Our pay is normally done Monday to Tuesday. Oh, a Sunday. Yep.
Yeah. So, look, unfortunately, due to the timing of all this, even though your pay period is Monday or Tuesday, based on the rules of the JobKeeper, to pass the fortnights, there has to be a payment made within that fortnight. So in your case, even though you make a payment on Monday or Tuesday, if you do that, you won't pass that fortnight. You'll miss out on that fortnight. So in your case, you have to do a pay period on the Sunday, a top up or your normal pay. You'd have to do it just a day earlier, which is unfortunate, but just based on the current rules with the timing of all this. So again, the third fortnight, I'll just bring up that slide. Between the 27th of April to the 10th of May, you must make a payment within those dates. So yeah, it has to be done on Sunday.
Okay. Emma has asked, I'm confused about the canteen sales. We don't charge a GST, so we don't include canteen sales in turnover.
So I'll go back up to that turnover test. So again, you look at your column that you fall into. So you would be this first column, not registered for GST, and you do include canteen sales. So
Brilliant.
If you're not, yeah. So I guess I'll just explain that again. If you're not registered for GST, then it actually is very easy to work out your turnover, or what is turnover. It's essentially everything except interest, donation, and gifts. Where you have the option is if you are registered or you're a charity. So if you are registered for GST, then you can make an election at your AGM to not include GST on canteen sales. And if you do that, then you don't include them in your turnover calculation. So yeah, if you've got any other questions, please let me know. But my recommendation would be see which column you fall into, and then have a look at these coloured boxes here to see what concessions are available to you.
That's a great resource, Daniel. Thanks for that. A little bit further down, I think we're running out of questions now. Natasha's question, what are the additional cash flow payments after the initial 10K?
So that's the 5 and the 5. So you got the $10,000 that many would have received already by lodging the March BAS statement. Then you'll receive 5,000 in after June, and then 5,000 after September. So that's how for the cash flow boost. That's how that's calculated.
Okay, and I think there's a few thank yous coming through there. I think we'll leave those questions there, Dan. You've done such a brilliant job. And to look, on behalf of the parent bodies out there, the PNCs, WAXO, WASCA, I'd really like to say how grateful we are for all the work you've done. And I know the preparation that you put into that, because we've been talking about this for quite a while. And want to say thank you very much. Those people out there, thank you very much for attending tonight. If you want to contact Daniel in your own time, you're more than likely to do that. He does work at Francis A. Jones, and he does a great job there. And he also helped us out a bit with the Treasurer's Guide in terms of writing that and the rewrite of that, and he's done a fantastic job. He's done an awesome job tonight. Thank you, Daniel. Thank you, everybody, for attending.
Thank you very much. Thank you.
Okay, people, when you exit this session, you will see a link to a very short feedback form. Please take the time to complete that. Have a great night. Thanks for joining us. Good night, all. Good night, Daniel.
Good night. Happy Mother's Day.